Hi, I'm Ted Hogan, owner and general manager of Dixie Ford, and this is our first blog of 2014. Happy New Year. Today I want to talk about something that's been in the news recently here up in Canada. It's something called subprime loans. Subprime loans are simply a category of loans almost exclusively for people with bad or poor credit. Recently there's been a woman in the news up here in Canada who claims that she took a loan out a year ago on a car and was told that she could renegotiate her contract after about a year or so if she made all her payments. And she's paying 25%, which is an exorbitant amount of money on any loan, as anyone would know. Apparently she's someone with a previous bankruptcy or some poor credit, and to get a loan they had to give her a high interest rate because it's simply a risk factor. So the bank, and I can't remember the institution, said, listen, we'll loan this person money, but we need a high rate of return. It's all about risk reward. And people that are getting subprime loans are people that cannot get loans through normal sources because they probably, in most cases, haven't paid back their loans. So they're considered a high risk. So there's this category of loans now called subprime, and all the banks, or many of the banks, are involved in it. And the dealers are involved in it too. And unfortunately, it's just a case of people that can't afford it have to pay more. But if you haven't paid your loans in the first place, you're a high risk, and that's the simple fact of the situation. One of the issues that's come up here, though, and I want to talk about, was the fact that she claims that her dealer told her that she could renegotiate her contract after 1 year if she made all her payments. Well, I'm here to tell you that in my experience, I've never ever heard of any contract that is renegotiable through the banks. If there's not explicit language in your contract that says you can renegotiate after a year or after any term, then it doesn't have that in the contract. These are typically and almost exclusively fixed loans, and the bank expects you to make payments just like a mortgage or just like any household loan that you would make. And they expect all of those payments to be made. So if it's a 48, 60 month, 72-month contract, you are tied in. In this person's situation, it seems that she's bought a car, paid 25% on the car, interest, and after a year, of course, the car is worth a lot less money now. So to renegotiate, she's in the same situation as anybody else. Your car is now worth less than it was when it started, but you still owe all that money to the bank. And in her case, she owes an exorbitant amount of interest. So getting out of that contract will be murderous. The best advice I can give is that if you're not making payments and you want to get a loan, you are going to have to pay a high interest rate. And some people are desperate, they need a car, but better to take transit or do whatever you can rather than pay 25%, because you will be locked into those loans. Now, we have done some subprime loans here at our dealership over the years, very few, and generally they're running 12, 13%, 14%. I can't say I've ever heard of a 25% loan, but you know, who knows how bad this woman's credit was. Anyways, I just wanted to bring up this topic. It's not something that affects most people, but it's in the news, and it's making the dealers out to look bad, and it's making this customer out to look bad, and making the banks look bad. And in this situation, it's simply, you know, buyer beware. When you're signing a contract, if it doesn't have explicit language, don't sign it if you're expecting something. Anyways, thanks for listening to the blog. Thanks for taking the time. I hope this was clear and concise. And if you have any questions, as always, please give me a call at Ted Hogan at DixieFord.com or email me at askthedealer@DixieFord.com. Thank you.